Assalamu alaikum wa rahmatullahi wa barakatuh. Uh, you are all welcome to day 14 session of this 30-day masterclass on land stock investment basics. Day 14, as I highlighted yesterday, is going to discuss, the primary market versus secondary market and what a beginner should know and understand. Uh, Today's lesson is going to be very, very important, especially for beginners. Okay, and for that, I would like to call all attendees to, make sure they understand every segment. If you have any question, you can send it via the chat area. At the end of my presentation, I will I will attend to those questions and answer them. If time could not permit me to finish, then tomorrow is going to be a Q&A session all through. So I will take those I could answer today and then defer the remaining for tomorrow. Okay. So like I mentioned, you can type your questions in the chat area. So let me share my screen so that we can begin in earnest. Okay, what? Okay. Yes. So I hope you can view my screen. This is the day 14 primary versus secondary market. We have started discussing a bit about the primary and secondary market in my previous engagements, but then this is where we are going to take it bit by bit and highlight the points that you need to understand with respect to the primary and secondary market. So the goal of today to help you understand where shares come from, okay, who create the shares ab initio, and how companies raise money from investors, and when should beginners participate. And well, of course, let's start by giving a simple analogy with respect to the two markets. So think of shares like houses, where you have, in the primary market, you can buy a house directly from a developer, okay? The developer is the one that, buys the land, design the house, build the house, and then sell it. Okay. Now the secondary market is like buying the same house, but from another owner later. The owner who might have bought the house from the developer. Okay. So definitely one should expect that one should expect to get it cheaper from the developer when it was, first built than from a secondary person who bought it from the developer, because definitely anybody who bought it from the developer would like to add a profit. And for that, you will be getting it at a higher price. Okay. So if you can get it from the developer, then why not get it directly from the developer? Another analogy which I highlighted in the the invitation, the post that I sent out for on my Facebook, highlighting the importance of this session and asking audience to join, is like, the factory and the showroom. Okay. Let's say you have a car. If you can get it directly from the factory, then better. I mean, it will be cheaper. Definitely. A showroom is a business person, that will now be in touch with the factory where they will be supplying the, let's say, cars to him. And then he will now add his profit. He has connection to the company, maybe for maintenance, to get parts directly and all of that, but definitely is going to be at a higher price when you buy something in the showroom than directly from the company, from the factory. Okay. So all this, we will highlight how it affects, the primary and the secondary market. Okay, in stocks, both exist on the Nigerian Exchange Group, which is the NGX. So let's start with the most important one here, which we have, the primary market. This is where new shares are churned out. Okay. The company, of course, will have to sit down, analyze its assets, liability, and then determine the equity, because economists will tell you assets equal liability plus equity. Okay. That equity is the shares. Okay. So they will determine what constitute the equity and then divide it into the shares that they want to sell. Remember the analogy, the farm analogy, where the farm is divided into 1,000, okay, and it's produce, and you bought maybe 10 parts, okay, which constitute like 1% or 100 parts, which makes you have 10% equity. Okay, so they will now divide the shares and determine the initial price for the share. Okay, so this when company is raising fresh money from investors. Okay, because they are going to sell the shares to investors, and they will use that money now to expand their operation. Okay, so that money it goes directly to the company itself. Okay, so here you are buying shares directly from the company, not another investor. It's like you going to the factory where, let's say, pure water is sold. Definitely you will get a bag of a sachet water at a cheaper rate than from retail stores. Okay, than from the retail stores, because the retail stores, they bought the same packets of pure water, from the factory, and they will have to add their profit. So if you can have access, to the factory, you will get it at a cheaper price than buying from the retail stores. Okay, so this is exactly the same thing. So here you are buying shares directly from the company, and there are four main ways that this can happen. Okay, that is getting shares directly from the primary market. Okay, the first one here is the IPO. Okay, which is the initial public offer. Okay, some call it initial public offering. Okay, and this is exactly when company sells shares to the public for the first time ever. Okay, it sells shares to the public for the first time ever. Okay, so it sells shares to the company for the first time ever. Okay, and the company is entering the stock market. So in this case, the money you pay goes directly to the company to fund its expansion, as I mentioned earlier. We'll take some examples, like when Seplat got listed on the NGX in 2014 via an IPO. So here, okay, we're going to explain how you can, because you get a form, you fill, you subscribe the number of shares that you want, and that you pay the amount, and then the allotment process takes place. We are going to break all those down. Okay, so it allowed Nigerians to own part of the oil giant, and then early investors often benefit because IPO prices are usually discounted. Okay, because that is the first time ever that the company goes to the public. So they are usually discounted because once it is listed, then it will be available for trading. And once trading begins, then the company has no control over the share price. Okay, it will be, market forces, the issue of demand and supply. That will be what will be controlling the share price. Okay, so usually it is discounted because normally when a company is listed, you see the price going up, even though it's not always the case. Okay, a company can get listed and then the share price can plunge. Okay, about 5 or 6 years when NGX was listed, the NGX group at about 27 naira. After some time, the share price went down to around 17. Okay, and then after that pullback, and then it picked up again. Now I think NGX share has reached over 100. Okay, 100. So a share price, and again, even when Aradel was listed, although we are going to explain how the listing, which is different from IPO, okay, the share price also plunged. Okay, and then later on it peaked. And now Aradel is one of the top companies, I mean, you have on the NGX. So, but more often than not, it is expected, to be at the discount price, and public excitement can push prices up later. This I will cite the example of Zikis, okay, which is a newly listed company on the NGX, listed on the February 20. 20 January this year. Yeah, that is less than 1 month exactly. So it was listed on 20 February January, and it was listed. The price was at 1.81 naira per share, and ever since it was listed, it let out around 600 million shares, and every day it is almost one of the top 10 gainers. Now the share price has reached over 10 naira. 10 naira, that is, it has done over 400% in less than 1 month. Less than 1 month of its, listing on the NGX, in less than 1 month. Of course, many investors are waiting for a pullback before they can enter, because, the normal rule or advice that you buy the dip. So they want to have a dip before they can enter, but up till now, that dip did not happen. Well, we will wait and see. So far, it is still having a sprint, and the NGX, the stock market, is a marathon. Okay, so we are still watching. Now, when to participate in IPOs, okay? You participate if the company is profitable, so you need to do your due diligence, check the records, the financials, okay? And it dominates the sector, the offer price is attractive, okay? You intend to hold long term, because I have just cited some examples in which you can have a dip, okay? Even after the IPO. So if you are in for the short term before, it experiences, it rebounds back. I mean, if you are in for the short term, then that could affect you. Okay, so you intend to long for the long term, and then because the share price can dip after the IPO, as I explained earlier. So avoid IPOs when the company has weak financials, the price looks inflated, or hype is the only selling point. Okay, just because people are talking about it, or the price is going up, you feel, I have to, for fear, the famous FOMO, fear of missing out. Okay, so you don't want to be missed out, even though that FOMO can also be channeled, I mean, to one's advantage, if you want to trade. Okay, uh, you can catch, you can ride on the wave. The only thing is that you need to have a clear entry and exit strategy. Okay. Now, IPO is not the only way that companies got listed. Okay, where they sell their shares to the public. Okay, where the money go directly to them. There is another case called listing by introduction. Okay, so not every company raises money when it enters the stock market the first time. Okay, sometimes the company simply lists its existing shares on the exchange without selling new ones. Okay, it will list its existing shares via it will have like a company that will be in charge issuing house, and it will have its own stock broker like Zikis. Zikis, when it lists on January 20, there was no IPO. Okay, it has an issuing house and stock broker. So you just go online and then buy the shares. But that is the first time that it got listed on the exchange at a price of 1.81. So some companies, do not raise money when it enters the stock market. It will just make available its shares to the public for people to buy and sell, to trade using the shares. Okay, so many other companies are getting listed via this method, listing by introduction. I mentioned Zikis. I will mention others as we proceed. So in this case, no new shares are issued, and the company does not raise fresh capital. Okay. it has an issuing house, okay, and it has its stockbroker. So through that, it will coordinate, the release of those shares to the public via the NGX, okay. So existing shareholders can begin trading their shares publicly, and it is done to improve transparency, allow public trading of existing shares, and increase company visibility and provide liquidity for early investors. Now, I will cite some examples below, which you have the MTN Nigeria. It got listed on the NGX in 2019 at around 90 naira per share. Okay, at around 90 naira per share. And then in 2021, okay, we are going to PO because in 2021, MTN did a public offer, okay, which is PO, which is the next one that we are going to explain, where many people subscribe. The PO was at 169 naira per share in 2021. And now MTN, you can guess, the share price around 720 naira per share, MTN. Okay, so that's why getting, buying through IPO, public offers, and the other channels, as we are going to explain, and holding for the long term, you stand to benefit a lot, a lot. Barefoot also got listed by introduction in 2022 at 40 naira per share. 2022, just 4 years back. And you can guess how much the share price trades now. 789.9 naira, and has returned over 1,700 since it was listed 4 years back. That's 17 times. 17 times. It means if you bought, let's say at 14 naira, let's say you bought, you sink 100,000. Now you are 17 times. That is 1.7 million. Okay. No, not even 1.8 million, because the return is over the capital. Okay. So it's the capital plus, so it is 100,000 at 2022 is now worth 1.8 million naira. Okay. 1.8 million naira. Okay, and Zikis, like I mentioned earlier, also got listed. It's an company, agro-allied industries, was listed 20 January at 1.81. It's actually 1.81, although it appeared as if 1.99, and it now trades at 10.8 naira, surging over 400% in less than 1 month. Over 400%. Meaning, let's assume someone who bought it, let's say 100,000 naira. Now that 100,000 has become 500,000 naira in less than 1 month. Less than 1 month. Without doing anything, just pressing the buy button, few seconds, and that's it. You just go and sleep. The stock market will be, multiplying your wealth while you sleep. That's why it is called, it's one of the ways to make money while you sleep. You are just sleeping and your money, is getting multiplied. So in all these cases, shares already existed. No public subscription via IPO took place. That is in the cases above. In the above cases, okay? So no public subscription via IPO took place. Investors could only buy once trading started, like that of Zikis that got listed February 20. You just go, and you realize it is available. And then if you want to buy, you buy and sell, and so trading it will just be kickstarted without IPO. So this is another listing method. Yesterday, someone was asking me something related to this, which I now asked him to wait, that today is the day that we are going to expatiate on different listing methods, that a company can now, join the NGX. Like Aradel, it moved from the NAST OTC to NGX in 2024 via listing introduction, meaning it was already public on NAST OTC, which is the National Association of Security Dealers over the counter. Is another, stock market, which we explained earlier, I think, in our day 2 class. Okay, NGX is not the only trading platform for stocks. There is another platform, which is the NASD OTC, where you have companies that are public that you can buy their shares and sell their shares. So it's like a waiting room. It has lower requirements than the NGX, and it has, I think, it has around 45 companies and a market capitalization of over 2 trillion naira. Yeah, over 2 trillion naira. And some brokers make available these stocks for you to be able to buy and sell. I know for sure APT, you can buy NASD OTC stocks and sell, as well as United Capital. Okay. I haven't traded any NASD OTC stock yet, but I think I will give it a try. Okay. But it's another stock market. Okay. It's another stock market. Just like you can trade on NGX, you can also trade on the NASD OTC. Okay, so there are two stock markets in Nigeria, NGX and NASD OTC. Those that have been with us, I mean, knew this at the beginning, I think in our day two class. Now, what it means for beginners. If you remember, this masterclass is designed mainly for beginners, especially those with zero experience in the stock investment, okay? Zero experience or have some, beginner level understanding, experience here and there, and need some organized series that will now take them through the ABCs. Okay, so if you are an expert, then definitely you may find something to learn. Maybe, I don't know. Okay, but especially for beginners that have little or no experience, then this masterclass is for them. So you cannot subscribe beforehand for the listing by introduction. Okay, you cannot subscribe beforehand. For IPO, you fill subscription form, you pay and everything, and then later on there will be allotment, and then the shares will become available once it is allotted to your brokerage account, so you can now trade it. You have absolute control over it. But in the listing by introduction, it will just be, available, just like you can buy any share from any stock. So it will just be made available. You wait until the shares begin trading. Okay, prices may be volatile at the start. Study fundamentals before rushing to buy. Okay, we are going very soon. We will reach. We have started. Dishing out some few things about the fundamentals, but we will take it as a topic and discuss it in details in few days to come. So, what are the expected new listings that we have in 2026? Well, we had one, Zikis. I mean, I didn't even know about it until few days to its listing. So it wasn't in my, watch out list. Okay. But these three are very big because Zikis is a very small company. Okay. It's a low cap company. Its market capitalization on listing was about 1.6 billion or so. And now it is worth over 6 billion. Okay. It is worth over 6 billion naira, okay, because of how its share price has performed over the last couple of weeks. Now, these are the expected new listings, in 2026. The first one is Dangote Petroleum Refinery, which is expected to be, a golden stock. Okay. Currently, the market capitalization is about, I think, 114 trillion naira. Okay. On Friday alone, yesterday, over 2 trillion investors gained over 2 trillion naira because the market did about 2.06% in one day. I mean, that 2.06% in one day, someone may think, I mean, that is minor, but sincerely speaking, ever since I started, monitoring this stock market, I don't think I came across a single day where the stock market, performed this high, 2.06%. In February, it did well, sometimes 1.65, 1.5, which are really, really, that means huge amount of money and, going into investors. And that will raise the capitalization of some companies. Now, before Boa Food was it has the highest capitalization, followed by MTN, but now MTN has overtaken Boa Foods. MTN is the number one stock, okay, by market capitalization, because I mean it has experienced, I mean, a surge in its share price, which translates into, I mean, higher market capitalization. Okay, so MTN is the number one, followed by Boa Food. So we will have to wait and see how they are going to compete, how it is going to end. The Dangote Petroleum Refinery is expected to be listed during the first quarter. Okay, and by the end of March, that will be the end of the first quarter. So even if you haven't started, trading in shares, make sure you have some money reserved for the golden stock. Dangote Refinery alone is expected to bring about 100 trillion naira into the stock market. 100 trillion naira into the stock market. You can imagine now all the companies, 144 companies, I mean, their market capitalization is 114 or 15 trillion. And Dangote Refinery alone is expected to bring about 100 trillion. Bismarck Rewani, one of the foremost economists, the CEO of financial derivatives, has forecast that in 2022, in this year, the market capitalization would rise to 262 trillion naira. Okay, because of the expected new listings, such as Dangote Refinery and Dangote Fertilizer Company is another one that is expected to be listed, and the NNPCL as well. It is also expected to be listed this year. So the market capitalization is going to rise, which means, and again, recently there was amendment to the retirement savings account, the threshold that they can use to trade in equities has been revised upward. So pension fund administrators can now have higher upper limit that they can trade in equities. So that will see another surge, of money fund into the stock market. Okay. So these are the expected listings. I mean, that big expected listings. Okay, there may be other minor ones. So that is about IPO. Okay, and the listing by introduction. The second method is PO, which is the public offer. You have IPO and PO, public offer. And in this case, a public offer happens when a company already listed wants to raise more capital from the public. Okay, it is already listed, it is already trading, and it wants to expand, its operations, buy new equipment, expand branches, and what have you. So it needs fund injection, okay, into its business. So it will now sell more shares to the public via PO. Okay, so in this case, more shares are issued to everyone, whether you are an existing shareholder or not. Remember, even IPO, it is available to everyone, whether you are an no, that's even, I mean, except, the company owners and what have you, but for the public. So that is the first time that they are going to buy that stock, okay? But the PO, the stock is already trading, okay, on the NGX, but now it is now selling more shares to everyone. Both its existing shareholders can buy the PO via a subscription form. They will, I mean, state the number of units they need, buy, okay, pay, and then allotment of shares takes place later, okay? So it's available for all existing shareholders or not. This is very important because this is going to be different from rights issue, which we are going to explain. So the example I already mentioned, that of MTN, okay, it got listed in 2019 via, listing by introduction. And then in 2021, it issued a public offer at 169 Naira. And this was, a perfect real life example. This is a perfect real life example of a company using the primary market, the 2021. Because here, you buy it, it's a primary market because you buy it directly from the company. The money that you are going to pay for those shares are going to go directly into the coffers of the company. Okay, so the company benefits from your subscription. Okay, the same thing like the IPO. The company benefits from your subscription. So after already being active in the secondary market trading since 2019, and its current price, okay, it's not 720, like I mentioned, it's 708.9 Naira, the last trading day on Friday. Okay, and other recent POs, LRLEX, which ended, I think, in December. Okay, LRLEX did a public offer at, I think, 12 Naira, 12.5 Naira. I think LRLEX is trading now at around 15 Naira. Okay, so usually the PO also, like, it gives you a bit, it allows you to buy the stock at a discounted price. You buy it at a lower price than the trading price. LRX, the PO was at 12.5 Naira when it was trading at that time around 13 Naira, 13.5 to 14 Naira. So the discount was less at that point, but now LRX is trading at 15 Naira, which gives you a margin of 2.5 Naira. And that, when you calculate, will translate into almost close to 20% discount. Now, even though the PO has closed, because IPO and PO, they have a timeline, a time span, okay? They have a duration, okay? It will be open from so-so date to so-so date, maybe a period of 1 month, sometimes even few days, okay? Sometimes even few days, okay? And sometimes if the target has not been reached, because they have a target, they have the number of shares that they want to buy. Okay, just a minute, let me put on the AC. It is a bit hot now. So they already have a target of the money that they want to get. Okay, so if the target is not reached, they can extend. They can extend it, in collaboration with NGX. Okay, they can extend and extend and extend. Okay, so and then TIP, that is the Initiates PLC, which is a waste management company, also did. In the case of TIP, it did two things, both PO and rights issue. We are going to explain rights issue, in the coming, in few minutes to come. So it issued a PO in December, I think from November. TIP was one of the top, I think probably one of the top 10 that, performed last year. At the time of, opening the PO, it has already done over 400%. So it was opened in November, and then the initial deadline was 12th December. And then after the deadline, it was extended to 2nd January. Yeah, it was extended to 2nd January. At that point, the PO was at 9.5 Naira, and it was selling around 10.5 Naira at that point. But now, guess how much TIP is selling? 20 Naira. Okay, 20 Naira. So those who bought the PO at 9.5 Naira, I mean, now that PO, has returned over 100%. 100%. So you can subscribe just like an IPO. We are going to learn the subscription method, okay? What are the various channels that you can access the IPO or the PO, as the case may be. So when to participate? Join if funds will grow the economy. They will have to give you a plan that they have inside, that they want to utilize the fund. So they will issue a prospectus, okay, that will contain the detailed breakdown of how they intend to utilize the funds, obtained from that PO. So you read it, and if you are convinced on the, with the trajectory that the company is on, then you non-subscribe. And the expansion, you join if expansion increases profit potential, because you are in the market to make profit. Okay, you are in the market to make profit. And you join if offer price is below the market price. This is very important. You join if offer price is below the market price. As we mentioned in this one, you are in the market to make profit. So why will you join if the offer price is above the market price? Let's say TIP, at the time of the PO, it was selling at around 10.5 or so. And let's assume the PO was at 11 naira. You can buy it on the secondary market at 10.5. Then why will you now buy it from the company at a higher value at 11 naira? You are getting it at a higher price while you can get it at a cheaper one. It's like you having, you go to the shop, you want to buy, let's say a pen, okay? 10 naira. This shop is selling it at 10 naira. That shop is selling it at the same thing at 9 naira. And then you know the prices of these two shops. Common sense will tell you, let me go and buy it where it is cheaper, so long as it is the same commodity, it is the same product, the same, item. Okay, so you would prefer to go where it is being sold at 9 naira rather than where it is being sold at 10 naira. Okay, so join if offer price is below the market price. Someone may wonder, can the offer price be above the market price? Yes, it can be above the market price. Okay. I think around November or December, November, December also, UBA brought out, I think, is it PO or rights issue? I think it was rights issue, okay, which is the next one that we are going to explain. PO or rights issue in which the offer price was above the market price. It was selling at 44 naira and then the offer price was 50. And again, as we are going to see now under the rights issue, we will see Owando, that is currently trading at 40 naira, it has an offer for rights issue at 50 naira. Okay, so we are going to see such instances. Now, when you subscribe, when you pay for the PO, for the IPO and what have you, what happens thereafter? That takes us to the next stage, which is the oversubscription and share allotment. Like I told you, before, shares are listed either via IPO or POs, there are finite number of shares. The number of shares are fixed. Let's say 1 billion shares. Of course, each one, okay, when you can know now the share price, the overall PO price, okay? So let's say you have 1 billion shares that is released for PO. And then, of course, you just go based on what you have, what you can afford, and then buy. This one will buy 100, 1,000, 1 million, okay? Like that. At the end, all these funds will be collated, and then the total number of shares that people, want to buy will now be collated. So, what if they have 1 billion shares, and after collating everything, they realize people have actually paid for 2 billion shares? That is called oversubscription. Okay, meaning the shares have been oversubscribed. And since the shares are finite, they have only 1 billion shares, they cannot afford to release 2 billion shares. So they have to do something to now, which we are going to learn. How are they going to, what will happen to the oversubscribed shares? Because it is oversubscribed by, 100% oversubscribed, okay? Now, that is one thing. The other thing is about allotting the shares, okay? How are the shares now released to those who have subscribed to their brokerage accounts? Okay, so this is the share allotment. Okay, usually companies, they have the timetable. Okay, this is the period for the PO, and this is the period that they will start the share allotment. So in this case, what we are saying, what happens when demand is too high? Okay, demand is higher than the supply. Okay, so there will be a way to shelve, the demand. So this is exactly the explanation. When a company launches an IPO or PO, investors apply for shares during the offer period, and sometimes it is oversubscribed. Okay, so investors, the shares requested by investors greater than the number available, And this situation is what is called oversubscription. So in this example, a company has 1 billion shares, like I mentioned, and then the subscription investors applied for 2.5 billion shares. So 2.5 oversubscribed. Okay. So in this case, it shows the market interest and strong market interest and confidence in the company. Now, what happens next in the allotment process, where shares are now released to the investors? So since there are not enough shares for everyone, the company has to distribute them fairly, okay, following the share allotment processes. The common methods, you have the pro rata allocation. In this case, everyone receives a reduced portion of what they applied for, okay? Everyone receives a reduced portion. For example, if it is oversubscribed by 200%, so you can receive, let's say, 50%, and that way everyone gets half of what he applied earlier. Of course, someone will say, what about my money? If I got half of what I paid for, what about my money for the remaining half? I will answer that question in the few lines to come, okay? And the sharing method, again, it can be used based on certain minimum guaranteed allocation, whereby retail investors may receive a small guaranteed quantity first. Retail investors like you and I, that one just maybe 10, 20, 100, few thousands. Then the remaining shares are shared proportionally. And you have sometimes institutional priority where large institutional investors can receive larger allocations depending on the offer structure. So these are the different, ways to take care of oversubscription. Now, what about the question that what happens to the money for unallotted shares? Okay, so again, this way, if you applied for more shares than you were allotted, the unused money is refunded back to you. So of course, they are not going to chop your money, okay? And that can be credited back to your brokerage account. So refunds typically happen within a few weeks after allotment. But then what about the allotment delay that could happen? Because, like, for instance, the LLX PO that closed, I think, around early December also, allotment has not taken place yet. Okay, even the TIP PO that closed 2nd January, allotment did not take place yet. Meaning, for those that bought those shares, they don't have access to them. Even though the share price has increased, if you want to trade your shares, you cannot. Okay? But don't worry. Even if allotment did not take place, your shares are safe and it will be allotted. And if there is any dividend payment within this period, you are going to receive that dividend, okay, based on the shares that you applied for, okay? So sometimes shares take time to appear in your brokerage account, and this is called the allotment delay. Until shares are fully allotted, you cannot trade them immediately. Like I mentioned, that affects the liquidity, okay? And prices may move, but you cannot sell yet because you don't have control. You don't have access to the shares. You have to wait until the shares are allotted, okay? But don't worry, whether allotted or not, your shares will not, are not going to get lost, okay? Now, like I mentioned, dividends still paid. If shares are not in your account yet, if the company declares a dividend, you are still entitled to it. And the dividend is credited to your bank account linked to the brokerage account, okay? If you had there was a dividend payment and you did not receive, you contact the registrar of that company and ask for your dividend to be paid out to you, okay? They will ask for your details, the subscription form, the receipt, and what have you, and they will process your dividend. Exactly, that's what I mentioned about following up with the registrar. Always check with the company's registrars if they are not credited to you. Provide your receipt of payment, subscription form, and brokerage details. Once allotted, you will have full control because that is when it will appear in your brokerage account and you can now buy and sell or transfer your shares to another broker if you so wish. So I gave the example of the TIP here. If you bought it through your broker, shares are yet to be allotted. I remember Mary Stem was one of those that sold, the offer, for the PO that time. So you cannot sell immediately, but if dividend is paid, you earn income. So registrar confirms allotment and shares, they appear in your account for full trading control, okay? So the key takeaway here is that allotment delays don't prevent ownership or earning dividends, okay? That is one thing you should understand. You must follow up to have absolute control and liquidity. But just because there is delay, it is not appearing in your brokerage account, it doesn't mean that your shares are lost, okay? Yesterday, if you may recall, we talked about the old method in which shares were sold, okay? Either via PO or what have you, where you just go and buy, you fill a form, they give you CSCS certificate, and that is the only thing you hold, okay? Some decades back, and so many people, those that bought shares in the 2000s like that, they have those paper CSCS certificates, which is no longer in use now, but you have a way of converting that certificate to the digital one where you have full control of your shares via the CSCS, okay? This is what we explained the full process yesterday, even how to open, CSCS account on their portal and how to view all your shares in one place, okay? How to view all your shares in one place on the CSCS portal. We described all this yesterday and how to, open the account, access, and what have you. And the process of the dematerialization, which is the converting from the paper CSCS certificate to the digital one. That is the dematerialization process. We have shown the form, the entry, the detail needed, and all of that. Now, the key lessons for beginners in this case, you should understand that oversubscription usually signals strong investor demand, okay? And is bound to happen for some stocks. It's not something that is out of place. And when it happens, we have explained the process through which, the companies try to streamline based on the available shares, okay? And you may not receive all the shares you apply for. So always apply with realistic expectations, and refunds are normal and part of the process. Now, this is we have discussed so far the IPO and the listing by introduction, followed by the PO, okay, which is available for all shareholders. Now we will move to the next step, which is the rights issue, RI, okay, which is, another step. In this case, a rights issue is reserved only for existing shareholders, okay? This is how it differs, from IPO, which is for all, and PO, which is also for all existing shareholders and those that are not shareholders. But rights issue is reserved for existing shareholders of that stock only. And even if you are an existing shareholder, you have to, there is what is called qualification period as well. You have to be in ownership of those shares based on certain qualification period, okay? Meaning you have to have those shares, before certain qualification period, before you are qualified to now get, the rights issue offer, okay? So the company offers you extra shares at a discount. That is the catch, okay? Extra shares at a discount. Usually, let me say, usually at a discount, because even like the PO, the rights issue, some companies can offer you, the extra shares, but at higher price than at higher price than the trading amount. Okay, it is trading, let's say, at 15 naira, at 14 naira, and then they will offer you a rights issue at 15 naira. Why will you now go and subscribe for something? 10 naira difference. When you have access, you can access it. You can buy it at lower price. So some companies do that. Probably they feel that is the value of their share. So they don't want to give any discount. But I just wonder, really, as an investor, someone who wants to buy, you always try to buy at a discount. So why will I buy, at a higher price when I can have access to lower price? So, well, that is it. So there are some instances here. So the company offers you extra shares at a discount, usually. Okay. So it is your right as an owner. That's why it's called rights issue. It is your right as an owner to exercise it. Okay. To accept it, that is to accept the rights issue, or you leave it out. Someone can take it. Okay. An example here, we have, Presco. If you already own shares with Presco, one of the top companies you have on the NGX, trading on palm oil, okay, highly capitalized and liquid, and the company raises a capital via RI as it did in November. Presco issued a rights issue offer in November last year at 1,420 per share when the share price was trading at 1,480. So it gives you an instant discount of 60 naira per share. Instant discount. But you may receive the right issue to buy more shares cheaper. Okay. If you receive the right issue, you can buy. You will get it at the ratio. That is the ratio which is called the 1 share for every 5 shares you own. That is like 20%. If you own, let's say, 100 shares, it means you are entitled to only buy 20 shares more. But if you take your shares, because I bought Presco earlier, so I was entitled. I passed the qualification period. Okay. I bought it before the qualification period. So immediately I took, my rights on NGX after I bought it, because they now said, do I want to buy more? So when you take your right, sometimes they can give you the chance to take more beyond those that is attributable based on the shares that you own. Let's say you have 100 shares. So the right issue will now, you are eligible to get only 20%. 1 for every 5 that you hold, that translates into 20%. It means you can get only 20 more shares. So if you buy the 20 shares, meaning you have taken your right, they can now ask you that, do you want to take more? Do you want to buy more? Some do give you that chance, okay, to take more, okay, because the right issue is usually at a higher discount than the public offer, okay? It has higher discount, okay? The first discount is, to everyone. At IPO, this is the first time it is getting listed, okay? And then at PO, it is already trading, and then they will give you the shares at a discount price, okay? Now, rights issue is below PO. They usually give you the price at a price below the trading price and below the price for PO. That is in case because the company may decide to issue PO and RI simultaneously. Okay, it can decide to issue 2 simultaneously. So in that case, you realize that the PO is having a lesser discount than the rights issue. The rights issue will have the greatest discount. I'm going to demonstrate this with clear examples as we move on, using the details of the TIP rights issue. The same time, because TIP did 2 things, PO and RI, during the same period. But then I wasn't entitled to the rights issue because the qualification date was August? Yeah, August 1st. And August 1st, I did not have any shares in TIP. Okay, so I did not qualify for the rights issue. Now, the ratio is, for the rights issue, the price is 7 naira per share. The PO, it's 9.5 naira per share. And at that time, the stock was trading at, the share price was around 10.5 to 11, 10 to 11 naira. So the PO was 9.5 naira per share. The rights offer was 7 naira per share. Between the rights issue and the public offer, you have about 20% discount more. From the public offer to the rights issue, you will enjoy about 20% discount. Of course, I did not enjoy because I was not qualified for the rights issue. But even those that bought the public offer at 9.5, after the offer, it started increasing again to 12, 13. Now, TIP is trading at 20 naira per share. 20 naira per share. While first week of, yeah, they finished the PO on 2nd January this year, 2nd January at 9.5. And meaning those that got the PO, I mean, that is over 100%. 100%. And sincerely, 100% is not small amount, depending, let's say you bought 10,000 naira worth of shares, okay? 10,000 naira, okay, worth of shares. So 100% means, that is like 20,000 naira. Imagine it's 100,000 naira. That becomes 200,000. Imagine it is 1 million, that becomes 2 million. Imagine it is 10 million, that becomes what? 20 million naira. The stock market will actually, it makes money for you while you sleep, okay? But only if you understand, all these types of, the secondary market, the primary market, and how to key in, okay? How to key in strategically and, get these IPOs, these POs, these RIs, and what have you, okay? They are a very good entry point, okay? And there are also good sources, good points for one to amass more shares, okay, at a discount price, okay? So, yeah, I mentioned this. Now, how rights issue allocation works, which is important for beginners. In a right issue, new shares are offered only to existing shareholders, like I mentioned before. This is very important. And the number you can buy depends on how many shares you already own. Like I mentioned, one for every 5 shares. Some will say one for every 6 shares, 6 shares that you own. Some will say one for every 3 shares that you own. So that is the rights ratio, okay? So this is the example of the rights ratio. Like if a company announce one new share for every 5 shares held, let's say as in the case of Presco, that translates into 20%. How do we get 20%? It's a simple calculation. Thus, you simply say 1 divided by 5, okay? 1 for every 5 shares you own, and then times 100%, okay? And definitely this will now give you 20%, okay? This will give you 20%, okay? So if it says 1 for every 3 shares, so you will just come here and revise, okay? 1/3 times 100, okay? And then you calculate to see the answer, because that will give you the percentage of shares based on the current one that you have, okay? So this means if you own 500 shares, you are entitled to 20% of 500 shares, because that simply means 500, when you take 500, 20% of 500, that will give you 100 new shares. If it is 1,000, that will give you 200 new shares. Like I told you, in this stock market, you need to learn some, little arithmetic, especially the percentage, calculation and the percentage gain and what have you. The ratio determines the maximum number of shares you are guaranteed, not the maximum you can eventually buy, like I mentioned. You can get, these are guaranteed, okay? Unlike the public offer. For public offer, it can be oversubscribed. The rights issue, generally, you don't have the issue of oversubscription because it's limited and you cannot, they have a way of restricting you not to go beyond a certain amount, okay? You are allotted, based on the rights ratio. And then if they feel, because not every shareholder takes his own right, okay? So they can now allow you to now get more eventually, okay? And that can now may allow you to buy more than your share, more than the right offer. You can, like I mentioned, you can buy more than the rights offer after shareholders choose whether to take their rights. Some investors ignore their rights. Like I mentioned, the new shares are pulled together and interested shareholders can apply for additional shares, okay, which is the excess application. And this means disciplined investors can increase their ownership beyond their original entitlement. And as you have seen, the rights issue is usually cheaper than the public offer. Okay, so these are all good ways to get stocks at cheaper prices. And the key lessons here for beginners are right issues reward loyal shareholders. Okay, and that is why sometimes it's good to have a bit of this here and there so that if there is any, good rights issue coming, you are qualified because you are already a shareholder. You are not forced to buy the new shares, of course. You can, your entitlement depends on how many shares you already own, and apply for excess shares can increase your stake. And there is a qualification date before you can participate in the rights issue. This I already explained in details. Now, when to participate? You accept right issues if the company is strong, the discount is meaningful, and expansion improves earnings. Okay? If the company is strong. For a company that is weak, that you feel, it's not doing enough, or your share price has not been doing well, you have not been rewarded. Taking more shares, some will even try to like exit if need be. So why take more? Okay. And the discount is meaningful. Okay. Because like I mentioned, sometimes the discount is not meaningful, at least from the perspective of the investor. From the company perspective, it is meaningful. Probably they feel that is what the share price should be. Okay. So irrespective of what the share price is trading, they will just peg their price above the trading price. Okay. But like I told you, UBA did that, either public offer or rights issue. I don't remember specifically. And just yesterday, Owando brought out a rights issue circular, which it's going for 50 naira when the current share price is 40 naira. Okay. So, well, so you have to read between the lines. It's not every rights issue that you just jump at. Okay. You have to read between the lines, do your due diligence. So ignore if the company is struggling, you don't want more exposure to that stock, or there is no discount, as in the case of Wando in this case, okay? Up to you. If you want it at a higher price, then, I cannot imagine how logical that can be. Sincerely speaking, you are in the market to make money. So why, even if you want to buy Ondo stock, when it is trading at 14 naira, you just go and buy it on the NGX floor, and then you get it at 14 naira. Why take your right at a higher price, 15 naira? This is the circular that came out yesterday. Wando proposed rights issue. You can see it clearly written. There will be the rights ratio. Okay, the total shares are 4.4 billion ordinary shares at 15 naira per share on the basis of one new ordinary share for every two existing ordinary shares. So this is like 50%. Okay, that is if you have 100,000 shares, then you are entitled to get 50,000 as your rights offer, okay, but at a higher price than it is currently trading, okay? And the qualification date, you can see the qualification date for the rights issue is today, Friday, 13 February. That was yesterday. So if you don't hold Owando stock yesterday, you cannot participate in this rights offer, okay? But if you hold their shares yesterday, you can participate. But you have to read between the lines. It is at higher price, okay? And you can see, how Owando has been trading. This is for the past 1 year, okay? It has posted negative returns, minus 42%. Minus 42%, and then you want to get in at a higher price. Sincerely speaking, this is something beyond my comprehension. Now, pricing strategy, rights issue versus public issue. I explained, some of these pricing, the discount advantage that a rights issue has over public offer. Company generally offer rights issue at a much steeper discount than a public offer, okay? And this is to reward the existing shareholders for their loyalty and encourage them to protect their ownership percentage, okay? And some could go through the dual approach, the hybrid, where a company could choose to run both simultaneously, to maximize capital. I gave the example of TIP, the initiates, where it utilized a combined rights issue and public offer strategy back in November last year. And there is the single approach, which a company will stick to one. Just, like Fitsin Healthcare, recently, I think, in December, it did a rights issue. There was a rights issue by Fitsin. At that point, it was trading above, the rights issue was at 35 naira when it was trading already around 60 or so. Now Fitsin is trading at around at 78. Yeah, I think yesterday it was trading around 78. Okay, and the rights issue was at 35 naira. 35 naira. Just December, I think it closed in December or January. So you can imagine 35 and now trading at more than 100%. So rights issue, that is why, if you remember, I told you that, one has to start to gain more in this, stock investment. You have to be reading business news at least once every week, because that is where you identify more opportunities, where you can take more positions. If you don't read business news, or even though sometimes your brokers could be sending you emails, so be checking your email. Even if you don't have the time to be reading business news every day, be checking your email, okay? Your brokers will be sending you important, news that affect, the stock market. And from there, you can get a lot of tips, POs, RIs, and what have you. Okay, so this is very important. Now, where to access the IPOs or public offers or the rights issues, okay? So as an investor, you don't need to hunt blindly for new offers, okay? There are three main places where offers are officially announced and accessed. The first one is the NGX, okay? The NGX portal, okay? Where, the trading platform, where the trading takes place. We describe CSCS as the vault, okay? Whereas the NGX is the portal, is the platform where trading takes place, okay? So this, you can find them, either in the NGX website, okay? It publishes new IPO announcement, public offers, rights issues, offer timetables, and allotment updates. And this is like the most authoritative public source. And it is best for investors who want verified official information directly from the market. Now I will take you, this is the website, ngxgroup.com, where you can go. We are going to the site, okay? And this is where you can find the offers. You need to open account with the NGX on the NGX portal. How do you open the account? We are going to see how that can be done. And you can check daily price lists and the details of companies, their financial reports, disclosures, and what have you, all on the NGX platform, okay? So I will quickly take you there. I will share my screen to see the NGX portal. Let me share my screen first. That is the browser. Chrome, okay, yeah. All right. So let me. Okay. Let's first go, okay, to the, okay, let's first go to the NGX group. Okay, let's go to the list of equities, okay? Like this is where you can access all the companies listed, okay? Their prices. If you want to check the price, the share price, the opening price, high, low. If you want to open and check, let's say this is access call. Okay, it will open and give you the detail, how the share price is performing. You can open it, you can increase it up to, I think, 2 weeks, 2-week period. Okay, so this is for 2 weeks. Okay, This is how the share price, you can move it. It will give you the details, the shares, this is the market capitalization, market classification, financials. You can download all this. You can see this one, updated October 30th, 2025, corporate disclosures, director dealings, and what have you. Okay. And then you can also check data. Like this is delisted companies. Okay. Under data, because some companies are delisted for various reasons, some because they are acquired, they are merged, okay, and some because they violate, SEC regulation and what have you, so they have to be liquidated and what have you. So like this one, this gives you the list of almost all companies that are delisted, so you can see them. I think 11 PLC voluntary, you can see reason for delisting, voluntary. I think 11 PLC now is being listed under NASD OTC. Okay, so you can see them. These are the reasons: regulatory, NCE, that's Nigerian Stock Exchange. Okay, NICOM, that's the insurance, regulatory agency, voluntary, you can see them all. Ashaka Cement, reason merge with Lafarge Africa. So if you hold CACS certificate of Ashaka Cement, now it is trading under Lafarge. So your shares are not lost. Okay. And then this is the list. You can go on and on again. Let's see, Dangote Flour Mills, delisted voluntarily. Diamond Bank, merge with Access Bank. Okay, so if you have shares, if you bought Diamond Bank shares, now it is merged with Access Bank. So your shares are still intact, and you can go to the registrar of Access Bank, which is Coronation Securities, and you can dematerialize your shares. EcoBank absorbed by ETI, Eco Transatlantic, I think ETI is another bank now. Now Eco Bank Nigeria Limited. Okay, so here you can check regulatory merge with Access Bank, Intercontinental merge with Access Bank, Gold Link Insurance. This is voluntary, regulatory, and what have you. Okay, up to the last one that is like latest ones just in December. Okay, Union Homes Savings and Loans was delisted because the CVN withdrew its practicing license. It's a mortgage bank together with ASO Savings and Loans, and the banks are now taken over by NDIC, okay, which is the bank insurance company, okay, and their asset will be liquidated to pay depositors, and then after which shareholders will be paid out. So this is it. You can see the dates, so you can see all this. Now we move to the NGX group. How do you open an account, okay, on the NGX? Because we say you can check offer, okay? That is invest.ngxgroup.com, okay? You go to invest.ngxgroup.com, and here you can see you can just log in if you already created an account. Otherwise, you click on create account and you fill this, and then you create an account. Okay, once your account is created, then I will take you to the portal to show you. Okay, so in my own case, I already have an account, so I could just, sign in. And when you sign in, this is the platform, the portal. You can see, you can explore offers. Currently, this is the available offer that it has. Eternal PLC rights issue. This is a rights issue. Unit size, the unit price is 22. Eternal is currently selling at around, I think, 31 Naira, also around 31 Naira. So the rights issue, you can see, it gives you almost close to 50% instant discount. Instant discount. Meaning if it will be allotted instantly, then you can sell and make 50% instantly. Okay? instant discount. That is very important. Okay, it is currently selling at around 31 or so. Okay, so this is the rights issue. The launch date is January 12 and the rights closing date is February 19. So it is still on. And if you want to buy, if you created an account on NGX, you simply click on buy and it will take you to, you will have to enter, your CHN number or registrar's account number, because here you enter your CHN number, okay? And you move on and you pay instantly, okay? You pay and wait for the allotment period, okay? Now, if there are any other offers, whether rights issue, whether public offer, you can still find them here, okay? Now, there is something here for subscription, okay? It will now show you those shares that you bought on the NGX platform. Because under the setting, there is a place where you can also enter your brokerage account details, your CSCS and your CHN number. You can add many brokers, okay? I will show you that page now. When you click on the subscription page, I'll share with you. Okay, let me go and first share the page. Okay. All right. Now, if you click on the subscription, on the offers, we have seen, what happens. Here on the subscription, you will see, those offers that you participated, okay? See, this is public offer, the date, 2025, 2020, 24, this a public offer, this a rights issue, this a public offer, another public offer, the number of units and the amount paid, okay? Everything, okay? Now, from here, it needs to be allotted to your brokerage account, because on the NGX portal here, you cannot trade these shares. You can see them because you bought them on the NGX platform, but you cannot trade them. It will only give you the amount, the number of shares, but you cannot sell. That you have to now wait until it is allotted to your brokerage account. If it is not, you have to contact the registrar, okay, so that it can be allotted to your brokerage account, where you will have full control over the shares. And then you can click on the settings. Again, on the settings, this is what it will, on the settings, you can add brokerage information. You can add all the brokers that you have, the CSS and the CSCS and the CHN numbers. Because at the point of buying either a public offer or rights issue offer, you have to enter your brokerage information. Okay, so you can add it under the brokerage information here. So this is about the NGX. Now let's go back to the presentation. Today's presentation is a really long one, I must say. And like I mentioned, you have to understand every bit of it, every bit of it. And if you have any question, like I mentioned, you can type your question in the chat area. And at the end, I will try to go over those I could this night. Otherwise, tomorrow is going to be entirely dedicated to Q&A, okay? So that if you go through the presentation and you have other questions, we can meet tomorrow and then discuss, more. Now, this is the first way that you can get, these public offers, PO, IO, and IPO, RI and RP and IPOs. Another one is through your stockbroker or investment app. Licensed brokers like AfroInvest, APT, Meristem, United Capital, Cardinal Store. Usually they notify clients via email or app alerts. Okay, that's why it's important to be checking your emails. Okay, and they provide the offer documents and enable you to apply directly through their trading platform. Okay, and this is the easiest way, sometimes to participate. So this is based also for beginners who already have brokerage account. Another way is through the company directly, company announcements and investor relations pages. They can have certain forms, directly, or a link that you can go and fill the subscription form, make payment directly to the company. Okay, so companies launching offers often publish details on their official website, their official websites or annual reports or investor relations pages. So here you may also see notices in newspapers and financial media. So this is useful for tracking offers early before the application window opens. Okay. And then another way is through the Securities and Exchange Commission, okay, which is SEC, okay? And here SEC is the one that approves every public offer before it reaches investors. And it has its own portal, okay, where sometimes it can list approved offers, prospectuses, regulatory notices. This confirms the offer is legitimate and compliant. And this is the website for SEC, sec.gov, okay? So you can visit sec.gov. There are many other important information on sec.gov that you may want to check. Now, beginner tip, the safest workflow is NGX announcement, broker notification. You can see that the Owando rights offer, the announcement is from NGX. If you look at the letterhead, okay, it's from NGX. So NGX announcement, broker notification, and then apply through your broker. That notification, I receive it via my broker, okay? I maintain a brokerage account with APT where we have a WhatsApp group. So I received it since yesterday, okay, via my broker, okay? Now, the last one, which is the fourth one, okay? Remember, we are still talking about the primary market, okay? We talk about the IPO, the PO, and the RI. Now, the fourth one is the private placement. Here, shares are sold privately to selected investors, okay? They are not traded, okay? There is no public announcement. Oh, oh, the screen is paused. Okay, then let me share it again. Okay, let me resume. Okay. Now I think I'm sharing the screen, right? Okay. So here shares are sold privately to selected investors, not the general public, still at a discount price to raise capital, okay? Usually to institutional investors, high net worth individuals, big guys, okay? Strategic partners. And here, usually retail investors often cannot participate, usually, okay? Usually. Uh, so example here, many banks, about, was it 2 years or last year, the CBN issued out a new recapitalization policy for all banks. Regional banks, they must have this amount. National banks, I think regional banks, is it about 20 billion? Okay, capitalization requirement, regional bank, yeah, national banks about, is it 200 billion? International banks, regional banks, I think, like Jais, I think Jais is a regional bank, Jais Bank. And then national banks, like Wema Bank, Wema is a national bank, 200 billion requirement. Then international banks, 500 billion. International banks like GT Bank, Zenith, Fidelity. So all these are international banks, UBA, Access, so 500 billion. So these banks initially, they did rights issue to raise funds. They did public offer to raise funds. And at the end, last month, no, December, there were a lot of private placements, a lot of private placements, because they did the private placement, at the last stage to make up the deficit, because probably they didn't get enough funds from the rights issue and the public offer. So they now went through private placement. In private placement, you will just be notified. You will just read through NGX news and you'll be notified that so company, did private placement worth so shares and amount and has now introduced the shares. So that will increase the outstanding shares of that company, okay, on the NGX. So you will just be notified by the NGX, because after they've finished, the private placement, they will liaise with the NGX and what have you, and then NGX will now make available, now increase the outstanding shares of that company. Okay, so this is the list for recapitalization watch for January 2026 by ProShare, where we have all the banks. If you look at this list, you have the capital, target, estimated, what have you. So this is now the rights issue, private placement, and public offer. And these are the various amounts that they got and their estimated, post-recapitalization capital. Okay, post-recapitalization capital. You can see Zenith Bank did rights issue and public offer, Access Co, rights issue only, First Holdco, rights issue, GT Co, private placement, Fidelity, all the three, rights issue, private placement, and public offer. So all this, are ways all the share prices are given at discount price. Okay, they are given at discount price. You can see Wema Bank only rights issue. You can see Jaiz Bank did a rights issue. Okay, and now this is the insurance recapitalization. Also, you have, I think, the end of June. Also, they have a deadline for the insurance companies also to reach certain target regulatory capital of a minimum of 15 billion. This one has 25 billion. Okay, the target. Okay, so some did rights issue, some private placement only. Okay, you can see it. So it tells you this is the way that companies raise funds. Okay, they raise funds to improve their capital or expand their operations and what have you. This is just the banking industry and the insurance industry. Currently, also there is new recapitalization for the brokers as well. I think it was issued last month, and the deadline, I think, is next year. I think it's 2027 or so, that they have to reach certain minimum, also the brokers. And there are many of them. So we will have to wait and see whether brokers will also merge and what will happen. But don't worry, like we mentioned earlier, even if a broker did not meet up with the capitalization requirement and what have you, your shares are still safe. Okay, your shares are still safe with the CSCS. Now we are done with the primary market, the IPO, the PO, RI, and private placement. Okay, 4 of them. We have taken a deep dive into it. The last part is the secondary market, where most trading happens, where you and I, who bought shares either via primary sources, that's IPO, PO, or rights issue, can now sell to another person. Okay, so that is the secondary market. This is the normal market where investors buy from other investors. Shares already exist and prices move daily. That's why on daily basis, you have report top gainers, top 10 gainers, and top 10 losers. Okay, you have decliners, those that have the laggards, okay, which the decliners, and those whose share prices have appreciated. Okay, and there are those whose share prices remain the same, okay, that do not move. Okay, so when you buy MTN on your app, you are in the secondary market. Okay, when you buy stocks using your brokerage accounts and what have you, that is the secondary market. The company does not receive that money. Very important. Another investor does. Okay, not a dime goes to the company on the secondary market. The company receives money via the primary market, the IPO, the PO, the rights issue, the private placement. These 4, when you participate in any of them, the company benefits directly. When you trade on the secondary market, the company do not benefit directly. The money does not go to the company at all. It goes to, another investor like you and I. Simple. But then how does the company benefit indirectly? If that trading, the market forces lead to the appreciation of the share price, because we have discussed, how share price moves up and down before. If you may recall, we discussed the market mechanics. that the share price do not remain static. Very few stocks, sometimes they remain static and then maybe appreciate or sometimes depreciate slightly, but usually the share prices, over time, they are cyclical. They move up and down, but over time, more often than not, they do appreciate. So when there is appreciation of the share price, that will translate into, rebasing of the capital, the market capitalization of that company, the total value of that company. Because the total value is equal to the share price times the total outstanding shares. So if the share price goes up, then that means the capitalization of the company will go up. Of course, that is like on paper, indirect benefit that the company will gain. I told you just yesterday, I saw MTN has overtaken Boa Foods. Boa Food overtook MTN previously, some months back. But now MTN has overtaken Boa Food because MTN share price has appreciated within the last 1 week. It has appreciated, which led to, higher market capitalization for MTN, higher than Boa Foods. Okay, so, but not a dime goes to MTN as a result of that, price movement. Not a dime. That we should understand very well. So the key differences, this is, a very, it was reconnecting me. That was why probably you realized I was away, okay? So let's quickly continue. We will soon finish. Like I said, today's lesson is a deep one. Okay, so the key differences, you have the feature, primary market or secondary market. Who sells shares? In the primary market, the company. In the secondary market, the investors. And then the price movement, it is fixed during that offer in the primary market, while it changes daily in the secondary market. For participation, it's occasional because, it's not every time that you have such offers. But for the secondary market, it is daily, Monday, working days from 10 to 10 p.m., 10 a.m. to 2:20 p.m., okay, except public holidays and profit opportunity, early entry advantage, okay? It offers early entry advantage if it is offered at a discount price, okay? And then on the secondary market, trading and investing, you can either do trading for the short term, okay, or hold for the long term benefits. Now, practical advice for beginners. Here, participate in primary offers when the company is strong, the price is fair, you plan to hold long term. I made mention about the dip, isn't it? Sometimes after even the IPO, use secondary market when you want flexibility, you want to trade anytime, and you missed the offer, okay? Or you do not qualify for that offer. And the summary here, we have primary market, which equals to buying from the company, and the secondary market equals to buying from investors, and the IPO simply equals to first public sale, while the public offer equals to additional shares to public, and the rights issue equals to offer to existing shareholders, and the private placement implies, sell to selective sell, okay, to, certain institutional investors or net worth individuals. I have my quiz, but then given the time factor, I think I will defer the quiz to tomorrow and then check the questions that you have. Try to attempt to answer them if I can. Otherwise, we consider this some of those questions tomorrow, because tomorrow, that is post day 14, is going to be Q&A throughout, okay? Except that we will take the quiz, that will simply test your understanding of the class session. Now, let me read the questions. Okay. Let's see before. This one says, Mukhtar Garba, which month are they expected? Which months are they exactly going to do IPO for Dangote Fertilizer, Petroleum, Refinery, and NNPC? Well, I don't know for the remaining two, but for the refinery, they are working. They mentioned that the first quarter, Okay, so we are still waiting. I mean, we are still in February, so towards the end of March, I mean, we are expecting it latest to the end of March. Okay, and for the Dangote fertilizer, also they are working towards that. We don't have any deadline for now. And then PCL, we are also hoping that it will be listed this year, no any timeline. And then this one says, Assalamu alaikum, sir. Please, if possible, share the uh, presentation or slide with us. I wanted to make, I started because like I took the whole day preparing this lecture. I wanted to convert it to slides. I went out. When I came back, I started changing it to slide, but I didn't finish. I mean, at 11, I realized that I didn't finish, and so I said, let me just present it this way. So I will give you the PDF. I will post the PDF after tomorrow because we are going to give it contains the quiz. Okay. So after I finish the presentation, after I finish presenting the quiz, I will upload the presentation. How this one, Dr. Ahmad Rufai Tukur, how would one know when the right issue is announced? I think I also explained in details how will you know, okay, via the right channels, NGX portal, your brokers, okay, check their emails, means of communications, is it a WhatsApp group or what have you, and the SEC, platform and all of that, okay? And then, Salam Prof, Muna Godiya, Allah ya saka da alkhairi. Question, is there any IPO now or PO or those companies that announce a prospective offer? Well, I have shown you I think Itana, okay? The Itana rights issue is currently ongoing. But follow, read about it and make sure you don't just jump onto, a PO. And I have explained the new Owando rights issue that came out yesterday. Okay. And, these are constant, things that happen in the stock market. Every now and then you realize there is one PO, one rights issue going on. So, and that is why you need to be up to date. You need to be reading financial news. You need to be reading. That's why, like, every day there is what is called economic highlights that is being shared from one of the brokers that I subscribe to, which I share on the group, the WhatsApp group and the Telegram group, okay, which gives like the major headlines, economic highlights. So at least even if you don't have enough time, just scan through that economic highlight every day, and because they announce some major changes, some major economic news, investment news, and all of that. Now, this one says Prince Hanif. Assalamu alaikum. Regarding the right issue, alaikum salam. I was given 42 shares Itana at 22 naira, which was the normal price, uh, of 36 naira when I bought it. But I made a payment for the 42 shares, they not reflect on my brokerage account, Bamboo. I emailed them, but there was no genuine response. Please, am I the only one not seeing this? Well, I didn't. Etana is not on my portfolio, but like I mentioned, there is the allotment period, and don't mind. Your shares are safe. Okay. Check the registrar for Etana. Okay, Etana registrars. Okay, and contact them because the offer is still open. So there are deadlines. The offer is still open. You have to wait after the offer period is over. Then there is prospective time for the allotment. And when that time is over, that is when you may feel, okay, let me try to contact the registrar and know exactly what is happening. But the offer is still open, as we have seen on my NGX portal. Okay, so there is no cause for alarm at all. How can I sell if I buy a share on the NGX? Well, if you buy a share like on the NGX portal using different offers, I mentioned that you have to wait until it is allotted to your brokerage account. That is when you have full access to it, where you can sell it, you can do whatever you like. But until then, there is nothing you can do about it. But still, if dividend is paid during that period, you will access it. Now, this one says, sir, could you be sharing the recorded versions of all the lessons via Telegram, please? Yes, I already did that. After this lesson, I will come, the video, I will, upload it on YouTube and share the link on Telegram. All past sessions of the live Zoom sessions are already shared on the Telegram channel. So everything is there. Okay. I personally joined recently and network has not been good enough to allow join the live sessions early. Jazakumullah khaira wa iyyakum. So no problem. Some are having network issues. So the recorded session, I mean, you can go over it. If you have any question, anything, you can join on. You can join us because we hold the live session every day. Okay. This one says I can't hear. I think is the net. You have a network problem. Jazakumullah khaira wa iyyakum. Today's lesson is a dense one. Thank you, Prof. Okay. Yeah, Doctor, you are right. This is from Dr. Yakubu Sanu Wudil. Yeah, it is really a dense one. I thought about breaking it into two, but then I thought there will be a lot of questions that will arise, which will affect the remainder part. So I thought about, taking it all through so that we are done and then you can have time to digest it gradually, and then tomorrow we can go through the Q&A where I could expatiate more on some of the things I touched today. Jazakumullah khaira, many of them wa iyakum. Assalamu alaikum, sir. My question is, do APT Securities have an app, and can one open brokerage account with them through it? Thank you. Yes, they have an app. They have a website. You can go to the website, aptsecurities, I think.com. There you can access the account opening form. So you apply. Once it is approved, then you can download the app, on Android or Apple, and then, log in and continue trading. Okay. So I think these are all the questions I have. I don't know if I will take just one or two from the attendees, or we call it a day. Okay, someone, okay. There is Suleiman H. Abdullahi. So tell us your name, where you are calling from, and tell us your question.
Okay, Assalamu alaikum. Can you hear me, please?
Pardon?
Can you hear me? Can you hear me?
Yes, I can hear you loud
Okay,
and
my
clear.
name is Suleiman Hud Abdullahi, and I'm calling from Abuja.
Okay.
My question is, Doctor, thank you very much for the very valuable insight you are giving us. It's regarding stockbrokers. Is it possible for someone to have multiple brokers? And what is the implication? And the second one, I think recently GT Bank issued this private, I forgot the other name, the one that they sent to their customers. So, but I bought, but I haven't received any information since then. So what is the best way to check the status of the investment? Thank you.
All right, thank you. Let me let's see. Want to open. Oh. All right. So your question, the first one about maintaining different accounts with different brokers. Yeah, it's possible. If there is need for that, you can open, because like I always say, broker is equivalent to a bank. Okay. You can maintain different accounts with different banks if there is need, isn't it? The same thing with the brokers. You can open different accounts with different brokers. Your CSCS number is different, which is like your account number with the broker, and your CHN number remains the same, which is like your BVN. Okay, so there is no problem with that, and you can transfer your shares from one broker to another if you so wish. There is no problem with that. All you need to is to apply, transfer through transfer of shares. So you can transfer your shares from one broker to another. Then your second part of the question, you mentioned that you bought maybe shares either via public offer by GT Bank, and up till now you didn't hear from them. So the first thing is, do you have a brokerage account? That is one. If you have, then you can contact the GT Bank registrars, which is, I think, that Datamax. Okay. Day before yesterday, on the 13th class, where we discussed about the CSCS dematerialization, okay, we Datamax is, I think, is the registrars for GT Bank. So you can find their contact online and contact them. They will ask you to produce your subscription form, your account details, and what have you, and then the process of allotment will begin. Okay, but then in the meantime, if GT Bank paid any dividend after you purchase the shares, you are also entitled to be paid the dividend. Okay, if you did not receive, then you can ask the registrars to now pay you your dividend. Okay, how do you know whether they paid or not? You have to be following the news as well. Okay, there is usually like a dividend payout schedule, that the investors, the brokers share. Okay, whenever a particular company is paying a dividend, there will be timetable, for the AGM after that, qualification period, then, the payment schedule. It will declare what is the dividend yield, and all of that. So all those details, you have to be really following up on that. And the brokers usually give so many information regarding all these details. So I think I have answered your question. So if there is no other question, then we can, I think, stop here and say goodbye for today. And tomorrow, we can take many more specific questions. Still, Suleiman has a question. Okay, go ahead.
Okay. Yes, it's regarding another previous purchase. Many years ago, I bought First Bank share. Initially, I was receiving dividends, but it took more than 5 years. I haven't received anything. I know it's not a kind of large number, so I don't know. Is it the same process to go and check, and are the previous dividend payable?
Yeah, they are. Don't you have a brokerage account?
I do.
So don't you see the shares in your brokerage account?
No, I haven't checked for a long time,
Okay,
honestly.
then check if they have been allotted. Otherwise, you find the registrar of First Bank, contact them, and then ask for the shares to be allotted, and then for your dividend, outstanding dividend, your arrears. Okay?
All right.
Yeah.
Thank you very
You're welcome.
much.
You're welcome. So I think now we stop here. Thank you all for attending. See you tomorrow.
Jazakallahu khairan, Doctor. May Allah subhanahu wa ta'ala reward
Thank
you.
you very
Thank you,
much.
sir.
You're welcome.
جزاكم الله
I mean,
وصل الصفونة وجاسة.
amen.
So, mashallah. Thank you, doctor. Thank you, mashallah.
Amen.
الله يعافيك.